What caused the Argentine debt crisis in financial history? Have you ever wondered how a country can go from being a thriving economy to facing a massive debt crisis? The Argentine debt crisis is a prime example of this dramatic shift. Let's break down what led to this significant event in financial history. The roots of the Argentine debt crisis can be traced back to a series of decisions made over several decades. By the late 1990s, Argentina had accumulated a staggering amount of debt. This was largely due to borrowing from international financial institutions and private lenders. The government was spending more money than it was bringing in, which is known as running a fiscal deficit. To manage this deficit, Argentina could not simply print more money because it had pegged its currency, the Argentine peso, to the United States dollar. This fixed exchange rate was meant to stabilize inflation but limited the government's ability to adjust its monetary policy. As a result, the government turned to borrowing to cover its expenses and pay interest on existing debt, leading to a cycle of increasing debt. External factors also played a significant role. The Asian financial crisis in the late 1990s and other global economic downturns reduced Argentina's export earnings. Commodities were a major source of foreign currency for the country, and when these earnings dropped, the government's revenue took a hit. This worsened the fiscal situation. At the same time, rising interest rates in the United States made Argentina's dollar-denominated debt more expensive to service. The cost of borrowing skyrocketed, and the government found itself in a debt trap, where debt grew faster than the economy could manage. Additionally, reforms like the privatization of Social Security shifted financial burdens onto the government. This increased the demand for foreign currency, putting more strain on the economy. The fixed exchange rate system became unsustainable, leading to an overvalued peso that made Argentine exports less competitive. By late 2001, the situation reached a breaking point. The government defaulted on its debt, the banking system collapsed, and the fixed exchange rate was abandoned. This crisis spread from the public sector to the private sector, worsening the economic contraction. In summary, the Argentine debt crisis was the result of a mix of domestic fiscal mismanagement, rigid monetary policies, external economic shocks, and structural weaknesses. These factors combined to create unsustainable debt levels and a loss of investor confidence, leading to one of the largest sovereign defaults in history. Understanding this crisis highlights the importance of balanced fiscal and monetary policies and the risks involved in fixed exchange rate systems.